Another Dow member making news today, General Electric, and at 122 years old, GE continues a makeover aimed at turning itself into a high-growth industrial infrastructure company with a significant finance arm. The latest step in that transformation, the sale of its iconic appliance brands to Sweden's Electrolux. Shares of the General Electric industrial giant were flat today, as a lot of investors are wondering what's next for GE. Mary Thompson takes a look.
It's been a busy 2014 for General Electric CEO Jeff Immelt. In his 13th year on the job, he's made big moves to create what he called a culture of simplification at the conglomerate. The latest step in that simplification, selling the appliance business to Electrolux for $3.3 billion. Here's Chip Blankenship, CEO of the division.
It's become harder and harder to tell the story about how the GE appliance business is aligned with the General Electric company. General Electric company wants to be a pure play technology and infrastructure business focused on regions of global growth and solving hard problems like building power plants and things of that nature.
The problem Immelt's solving for, get GE to where 3/4 of its profits come from high-growth, higher-value industrial businesses like energy, water, and aviation. The rest to come from its finance arm, a unit that once accounted for more than half of GE's earnings. With appliances profits accounting for less than 3% of GE's total, the loss of those earnings will be more than offset by the deal Immelt struck in June, buying the power business of France's Alstom for $17 billion. Its completion forecast to lift GE's industrial profits to that 75% level, while this year's spin-off of GE's credit card unit and expected sales of real estate holdings will cut profits generated by GE Capital. GE's also been selling other businesses to streamline its operations. 2014 sales of fuel and rail signaling businesses, along with appliance, total $4.6 billion. That's above the $4 billion in targeted sales GE forecast earlier this year. Looking ahead, many expect GE's other iconic brand, lighting, will someday go on the block. For now, though, the sales put more money in the pockets of the 122-year-old firm, money GE will likely use for bolt-on acquisitions in the $1 to $4 billion range, this to build out its higher-growth businesses. A steady course for a firm in the midst of ongoing change. For Nightly Business Report, I'm Mary Thompson.